प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take you through the headlines tonight. Market snaps two-day winning run as Nifty slips below 18,050. Auto stocks gain while metals drag. Country's largest insurer, LIC, calls for 18% GST on insurance premiums to be scrapped. Says valuation for the IPO will be decided within a month. It's a Business Today TV exclusive. Bumper listing expected for Nykaa as shares trade over 60% premium in the grey market. Stock likely to debut on November 10th. Paytm IPO subscribed 48% on day 2. Retail portion booked 1.23 times. KFC operator Sapphire Foods Ipo subscribed 49%. Retail investors portion booked 2.56 times on day 1. Haryana government 75% job reservation to come into force from 15th January 2022. India Inc. miffed, experts say move could trigger exodus of large domestic global firms. Let's bring you the big exclusive with LIC Chairperson M.R. Kumar ahead of its mega IPO. He spoke candidly with our managing editor Siddharth Zarabi, where he says valuation for the upcoming LIC IPO will be decided within a month.
Hello and welcome. I'm Siddharth Zarabi, and with me today the chairman of the Life Insurance Corporation of India, Mr. M.R. Kumar, the largest company in India and which is now headed for what we are calling the Great Indian IPO. Mr. Kumar, welcome and thank you very much for your time with us today. This is going to be India's largest public issue by far, and what we are also reading, the largest IPO ever by an insurance company globally. So it's something that's going to be huge and historic, and that's why I want to begin by asking you to tell our viewers and our audience, where does this entire process stand as of today?
Thank you, Siddharth. Coming to your question, I think after the announcement by FM regarding IPO of LIC, a lot of work has happened. It all started with the appointment of Ernst & Young as our implementation advisor for calculation and processing of embedded value, and the reporting actuary Milliman, who will actually report on the values. So this is a huge job for any insurance company. That too for LIC, it is a really huge one. It takes a lot of time to get that value, but I think in the last 1 year we've done a lot of work, we've covered a lot of ground, and maybe in a month or so we should be able to get through that EV calculation. Besides that, Deepam, which is actually doing the whole process for LIC, has brought in the book running lead managers who have started their work on advising us. We have a legal counsel in place, and the work of writing of the draft red herring prospectus has already started internally. At LIC, we have set up an IPO cell, project management unit, headed by a senior executive director. A lot of people, almost 80 to 100 people within the corporation, are working on supporting the whole process. And I think going forward, we will have a lot of work still left, but then I'm confident that we should be able to get things done the way we want it to be done.
What is the timeline likely at this stage for this issue to conclude? I believe the internal target really is within this fiscal. Is that what you yourself anticipate?
That's true. You said it right. We are planning to bring out the IPO, the listing rather, by the end of the fiscal, and we are working towards that.
I want you to now tell our audience about how large LIC is, and the reason I'm asking you this question is it's not just a balance sheet size which is pegged at $511 billion. It's not the number of policy holders. By far, once this whole process is over, India will wake up to the fact that LIC is the largest Indian company. Demystify for our audience, how large is LIC?
All right. Let me start with the strengths that we have on employees. We are probably one of the largest PSUs in terms of size of employees, 1 lakh plus employees. We also have the largest number of agents in the, probably globally, I do not know. We have 13.5 lakh agents. And you can imagine that when LIC started off in 1956 at the time of nationalization, there were hardly a few thousand agents with us. So we have grown in leaps and bounds over time. And we are very strong agency channel. And because people in India and Indians particularly and globally also, people still have the comfort of buying insurance, talking to somebody, eyeball to eyeball, and trying to understand the nuances of life insurance before they actually buy the product. So that has really worked for us, and we are that way large. I don't have to tell you about our assets under management that is very, very humongous. And the kind of work we do on a daily basis, whether it is equity markets, whether it is selling insurance, is equally big. So therefore, I think that is what I would like to tell you.
Over almost 2 decades plus of private insurance companies operating in India, and yet you command maybe 3/4 of the market share for the insurance product space in this country.
Yes, that's right. I think I owe it to the LICians, our employees and our agents who have made it happen for us. And I think globally, we must be the only PSU life insurance company which has held on to so much of market share after, as you said, 2 decades of opening up to the market.
In terms of valuation, what is the internal number that the company is working with?
We don't have any number. I wish I could tell you.
180 to 200 billion dollars is one number.
Right. I know people are coming up with a lot of numbers. As I told you, the embedded value is still under process. Only once we know the embedded value, and valuation is ultimately a multiple of that, and that will be decided again not by us. It will be decided by the markets. So really can't tell you more about that.
There's a lot of anticipation for this issue, not just because of the fact that the company is very large or the fact that we have an IPO boom underway. It also sort of represents the coming of age of the process in which the Indian markets have matured. LIC, lends a very big shoulder to our markets. In terms of the size, Mr. Kumar, of the issue, are you in a position to give us a number of what the size of this issue is? There have been reports that it will be a multi-phase one, perhaps up to 20% will get offered over phases. What can you share with us?
Really can't share much because again, government is also waiting for the embedded value numbers to come out, and government will take a call on whether it is going to be 5, 10, 15 or 20.
Okay. What about the people who will participate? There are 2 points that I specifically want you to address. One, do employees get a fair chance? Does the public at large get a fair chance? I've been noticing comments on social media saying that anyone who applies for LIC should get a share in his demat account. The company and the government the corporation should make it sure that happens.
Siddharth, you know all about IPOs, and it's a question of how much it gets subscribed, oversubscribed, and based on that, people will get allotment. Part one. Part two, employees, yes, they do stand a chance based on the regulations in force. SEBI allows employees to get a fair chance. Also, for the first time, possibly policyholders are also likely to get a share. It's been sort of amended in the Act. It's an enabling provision, but how it will really open up and go forward is something that we're working on. So it's quite possible that a share of this could be given to the policyholders as well. Again, it will depend on the multiple, it will depend on the subscription. It's not that every policyholder will get on allotment. Again, it will depend on many other factors.
By itself, whatever is ultimately decided in terms of the ratios and numbers, the fact that someone who holds a Jeevan Bima policy also gets to own, even if practically a part of LIC, will itself be quite a unique thing in the Indian context.
Very unique. It will be very unique.
How does today LIC compare with global peers? If you can just give us some overview on that.
Globally, I think there was a report recently on brands, and I think we are in the top 3 in terms of brand valuation amongst in general. Plus, among insurance companies, I believe the only insurance companies which have the kind of size we have are based out of China. And other than that, I don't think there are any insurance companies globally that match the size and the operational strength of LIC.
I want to now turn to some other topics. The first topic which I want you to address is what changes for the corporation post-listing? Is it just 5-10%? Because that is not a huge stake. It will still remain in some ways a company that is owned via an act of parliament. I don't even know how I should describe the ownership of the company. Maybe you can throw some light. What will change for the company post-listing regardless of the size of the issue?
Post-listing, LIC will continue to be governed by the rules of the Government of India. Also the regulator IRDA. Plus, after listing, we will also have the SEBI, as part of the regulator. So we will have to be in sync with not only the regulatory provisions on the IRDA, the insurance regulator, but also in sync with the SEBI regulations. So that is a basic, a big change that will happen. We will be called upon to, give a lot of disclosures, which is quite obvious for any listed company. So the kind of disclosure that we'll have to give will be much, much more than we do as of now. And therefore, for all this to happen, we are working internally to create systems in place. Also get people to work on those systems. For example, since SEBI LODR regulations will be enforced, we will need a company secretary possibly to address those concerns of the regulator that will be there. So those are the things that are work in progress as of now.
So how would you respond to some of those people who are saying nothing will happen, it's just the government filling its deficit hole by selling equity in a crown jewel corporation, things will remain the same?
Let me put it differently. Yeah. Things have not been the same as far as LIC is concerned. It has always been different. Ever since the private sector opened up and insurance sector opened up, as I said so earlier also, that we have continued to have a market share. It's not just because we are a big PSU, it's because we adapted to the changes. We had a lot of technology put in place over the years. In fact, we were one of the first to adopt and adapt to technology very early on. And therefore, going forward, I don't see why we will not be as nimble or forward-looking as anybody else in the market.
Post-listing, will your existing rules with regard to the transfer of the surplus to shareholders and to policy holders, is there any possibility of that changing? Does the listing come in the way in any manner?
Listing doesn't come in the way, but as per the regulatory, compliance that we have to do, we will probably have to change the surplus distribution over a period of time, and we are working on how it's to be done.
More in line with the 90-10?
Absolutely.
Okay. I want to also get you to respond to another point that has come up, and which is the fact that LIC is sometimes seen as the share subscriber of the last resort, especially for certain PSU situations. I don't want to use the word bailout, but that's been used. Will that change? Do you think that's a fair concern? Sometimes in the past, when your numbers and financials were not open to sort of technical and financial scrutiny, is that a fair assessment?
Not really. I've said this before as well, that we are looking at the basic strengths of the companies in which we invest, whether they are PSUs or not. And I've also been saying of late that PSU banks, for example, are doing extremely well. I mean, going forward, we are looking at a lot of valuation change happening in PSU banks as well. So there's nothing wrong in the investments that we make, because we do due diligence when we make all these investments. And we have never made any losses in any of these investments so far.
Okay. Let me now turn to one more issue which has been discussed in the recent past. This is the GST that is payable on insurance premiums. As one of the largest issuers, in fact, you insure most of India. What is your own view on that?
Personally, I believe that 18% is too high for life insurance. The reason I say that is insurance in India is still sold. It is not bought. It is not a luxury item. It is an absolute necessity for people to have insurance. And that's what we work for. I mean, every day we tell our agents and intermediaries, give insurance to people, please reduce the protection gap. Therefore, I think it would make sense if people are given some reduction in GST in terms of, in fact, the very old policies that we have, LIC continues to absorb the GST for the very old policies. But of late, then we have had to transfer that to the policyholders. But then, having said that, I would like to reiterate that yes, it's too high.
I personally believe it is unfair and there should be no GST on me paying a premium to insure myself year on year. Maybe at the time of buying the policy, there can be one seen from a transactional point of view, but why my annual premium?
As I said, I agree.
You agree with that?
I agree. And in fact, it would rather possibly help us to sell more insurance.
Watch the complete interview with LIC Chairman M.R. Kumar on businesstoday.in. Markets today cooled off just a touch. The Sensex down over 100 points or 0.2% at 60,433. Nifty settling 24 points lower or 0.13% lower at 18,044. M&M, State Bank of India, Reliance Industries, ICICI Bank, IndusInd Bank, Bharti Airtel, some of the gainers on the list today. Nice spike that we saw on M&M. On the flip side, HDFC Bank, HDFC, Titan, HCL Tech and ITC, some of the names making up the losers list. The Nifty Bank Index also trended lower. The Nifty Financial Services Index fell 0.7%. The Nifty Auto Index, however, gained up over 1%. The second day of the Paytm IPO garnered higher traction from retail investors as compared to day one. However, the qualified and non-institutional buyers showed a lukewarm response on day two. The 18,300 crore rupee Paytm IPO is India's biggest ever IPO and among the likes of the online platform companies like Zomato and Nykaa. As Paytm creates history, it will be interesting to see how the lackluster response from investors affects the company's plans going forward. Sapphire Foods IPO is off to a strong start. Retail investors have lapped up the delicious offering. The retail category was fully overbooked on the first day itself. The initial public offer of KFC, Pizza Hut operators was subscribed 49% on day one. The IPO will be entirely an offer for sale of over 1 crore equity shares. The company has fixed the price band of 1,120 rupees to 1,180 rupees per share for this offer. The IPO is expected to raise 2,073 crore rupees. All signs, meanwhile, point to a strong listing of the Nykaa share in the stock market tomorrow. A day before listing, analysts are putting the premium on the stock, the grey market premium, at 760 rupees, which puts it at 1,885 rupees in the grey market vis-a-vis its upper price band. The over 5,000 crore rupee issue was subscribed nearly 82 times when it closed on the 1st of November. 1 year after the Haryana State Assembly passed the Employment of Local Candidates Bill, the BJP-JJP government ordered that the law providing for 75% reservation for locals in private sector jobs. And experts believe that this move could trigger exodus of large domestic and global firms.
%75 एम्प्लॉयमेंट ऑफ लोकल कैंडिडेट्स प्रदेश में भाई दूज के दिन लागू हुआ। युवा को रोजगार देना हमारी सरकार का प्रथम लक्ष्य है। 75% एम्प्लॉयमेंट ऑफ लोकल कैंडिडेट्स प्रदेश के मेरे युवा बहन भाइयों के लिए एक लैंडमार्क आने वाले समय में साबित होगा।
This law that kicks in from January 15 next year requires firms to reserve 75% of all jobs offering a salary of less than 30,000 rupees a month. This law will be applicable for a period of 10 years. However, upcoming IT companies and startups will be exempted for 2 years from hiring local candidates under Haryana's private sector job quota law.
कोई नया स्टार्टअप है जो हमारे प्रदेश में लगेगा, उसके लिए 2 साल की एग्जेम्पशन इस एक्ट में हम देने का काम करेंगे कि वो अपने आप को एस्टैब्लिश कर पाए। कोई भी आईटी कंपनी नई लगेगी, उसको भी एग्जेम्पशन का लाभ मिलेगा।
On the other hand, the industry has raised concern against the law, claiming that this would limit access to quality talent. This news could also trigger an exodus of large domestic and multinational investors across sectors such as auto, IT, that rely on highly skilled manpower.
It has not come completely as a surprise to us or the industry, though we are all disappointed that the law has finally taken shape. And industry has always been evaluating, if this law were to come in place, then what will happen? So there are a couple of things. One, a lot of the industry players are saying that, look, they're already invested in Haryana, so they would like to continue to be there. But at the same time, the future growth in terms of the employment, in terms of, the business opportunity that is coming in, and to kind of take that forward, I think increasingly there is a sense that how can we leverage, the hybrid work model, or let's say also the locations nearby, whether it's Noida or Delhi, to shift some of the jobs there.
Experts believe that job-producing companies may shift their base from Gurugram to neighbouring hubs such as New Delhi, Noida or even Jaipur. With Chetan Bhutani, Bureau Report, Business Today Television.
We're joined now by Sanjay Kapoor, President ACMA and immediate past Chairman CII Haryana. Sanjay, welcome to the show. My first question is, how are you anticipating this new development from the Haryana government that from January 15th next year, 75% of jobs in the private sector should be reserved for locals? How is it likely to impact significant players in the state?
Yeah, I think the first point in question is, what are the details of the plan? We're still awaiting to see the details in terms of how we define the 30,000 a month. Is it gross salary? Is it your basic salary, etc.? So we're awaiting the details from the government to see, how they've defined this. The second point is, anything restrictive does make us uncompetitive, because then we're not allowed to hire maybe the best talent and forced to hire outside of that. And therefore, it's not a great precedent to set. If other states follow this, it can create, more problems for us, or more difficulties and more challenges for the industry at large. So we're not in favor of restrictive practices as such. However, as industry, we would like to support the government in terms of what their objectives are. And if employability and employment is their objective, then I think as industry, we should work together with government to find the right solutions.
Absolutely. So that leads me to my next question, Sanjay, which is really how it's going to impact existing ops, because, there are key domestic and global firms housed out of Haryana, particularly Gurgaon, that could be impacted, that could see a trigger or an exodus post this announcement.
It could well do. Like I said, when you have restrictions, it can make you uncompetitive, and it's a very competitive environment out there currently. So you want to do whatever you can to make sure you have the best talent, and we're all highly dependent on good talent, and that's really become the assets of our business is our people. So I feel that creating restrictions will have its own challenges.
Sanjay, thanks for joining us. Well, that's where we leave it on the show today. Thanks so much for watching.